Hi, Paul. So in previous videos, I've spoken about setting yourself up and positioning yourself as an investor before you even contemplate doing any form of deal origination and sourcing, and that probably your first deal is more than likely in your phone book. My first four deals, as you will know if you've watched previous videos, were in my phone book, and it's, I believe, very much easier to convince somebody that you already know or already have a relationship with to do a deal than somebody that you've never spoken to before. And I think it's the same when you own a business. It's much easier to sell to an existing customer than trying to find a new one. So in this video, we're going to talk about many different ways that you can source a deal. And contrary to belief, it's certainly not through brokers. Believe me when I say this, do not waste your time with brokers. It may seem counterintuitive to not source deals through brokers, because ultimately brokers have got a live audience of people that want to sell their company, so you can easily gain access to your target audience quickly. But in my 108 transactions that I've completed over the years, only three have concluded where a broker was involved. And with hindsight, we overpaid for them. They were probably some of the worst to get over the line, and dare I say it, probably we shouldn't have bought them. And I guess this epitomizes sort of why we don't really source deals through brokers. I'm not saying that they're all bad. I'm sure there are maybe some decent business brokers out there. I'm yet to come across them, but ultimately brokers charge fees. To justify those fees, they typically tend to overinflate the value of the business, and they act as a blocker to the deal because essentially they're setting false expectations, really, so that they can justify those fees that they charge. I actually heard from a CEO a few years ago of one of the largest brokerage firms that they make more money from their upfront fees than actually selling businesses. Only 10% of the businesses they list, they actually sell. So you want to build a sourcing machine that gives you access to businesses that essentially are not for sale. So sourcing and deal origination is essentially a marketing activity. Successful deal makers create a habit that every week without fail, they have emails going out, they have LinkedIn connections with business owners, they've got letters going out asking people if they want to sell their business, and they're creating regular content. And it's a bit like being a management consultant. You sort of market yourself, you get that contract, and then most consultants then tend to stop marketing whilst they're working through that project. But then they finish the contract and then they have to start again. So they essentially pick up the marketing. And this is why you tend to have, certainly a lot of consultants tend to have those lean periods when they don't have any work. It's sort of feast or famine, so to speak. And sourcing can be similar, which is why you want to make sure that it happens religiously, week in, week out, without fail. I mean, what's the worst that can happen? That you've got too many deals to deal with? Well, that's certainly a better problem to have than not having, any leads at all. So it really starts with data, and regardless of how you're going to source, you need the data. So in the UK, there is a lot of information in the public domain. Companies have to file accounts. There's a public register of shareholders and directors, and you can use tools like endol.co.uk, where there's like a paid subscription. I think it's around about £50 a month, that enables you to put in a criteria to pull off a list. So if you were going to use something like Endol, use their Explorer product, you can put in that you want only active companies, so not companies that have closed. You want companies that have been established for at least 10 years. So you're looking at the incorporation date, older than 10 years. So you're essentially looking for long established companies. When we're sourcing, we tend to put in a criteria of a maximum of three shareholders. And the reason for that is that, ultimately you've got to convince people to sell you their company. And we found that if you go more than three, then you've got, obviously many different people with different motivations, different aspirations. And we sort of say, ideally we want a business where there's one shareholder, two shareholders, or maximum three. You can then filter by industry and geography. So, for example, I would suggest getting a list of companies in your industry of interest. Target one or two, so not any old company that might fit the criteria, just those in your industry of interest. We find that deal makers that are focused on maybe rolling up in a particular industry, the industry that they go for tends to be something they've worked in, owned a business in, ran a company in, got contacts in, or certainly passionate about. And it just makes for when you're having conversations with business owners, a much stronger conversation, easier to build rapport and relationship if you've got experience within their industry, because you're probably going to understand their business model. You're going to have, mutual contacts, and people that you know. That just makes maybe for an easier route to getting a deal done. And then post acquisition, in terms of developing the company, building upon it, you can utilize your expertise from whatever you've done before. So I'd recommend targeting a specific industry that you've got expertise or contacts or passionate about. And I'd probably look initially, if you're new to this, at looking for companies within, say, an hour's commute of wherever you're based. So whilst I don't recommend visiting every lead face to face until you've qualified them and you've got a feel for them being realistic, why would you target a company the other end of the country when there's probably enough opportunity close to wherever you're based, and you're not then wasting lots of time traveling if you do tend to go and meet target acquisitions later on. And then from a financial criteria, you can add this in depending on what you're targeting. So, if you wanted just profitable companies or asset rich companies or distressed companies, you can add in various different criteria on something like Endol to pull off a list of companies that meet your target list. So if we wanted to buy a long established, well run, consistently profitable business, we will be inputting certain financial data so that we ensure that we pull off companies of that list. And then we would typically target people over the age of 59. Again, Endol allows you to do that. So essentially, you've got more chance of connecting with a business owner that might be looking to retire, for example. If you go and look across the pond at say the US, there's certainly nowhere near the level of public data that you have in the UK. But one great way to target the right size business is to look up companies on LinkedIn in your niche and your geography. You can use LinkedIn to sort of filter down to various states. You can look for companies with, say, between 50 and 200 employees. So, at that size, they're more likely to be the right size for an acquisition than maybe a really small company where there's only 10 employees. In Australia, it's very similar. The level of data just isn't there. I mean, there are paid for softwares like Credit Watch, for example, that you can use that does give you some level of data that's out there and enables you to filter. But we find that LinkedIn, using that approach of sort of targeting companies between 50 and 200 employees in the niche that we're looking for, is the way to go. What you then want to do is build your list. So just simple spreadsheet. You want the name, the address of the director, business owner. Where possible, you can try and Google and get their email address, and a link to their LinkedIn. So you've got a URL on the spreadsheet. You can then use that to merge this data, whether it be into letters, into sending emails, or connecting on LinkedIn, or uploading to the various different softwares that you can use to, sort of automate some of this process and make it easier rather than a manual job. So I don't want this to sound like it's a lot of work. I mean, if you did this manually, certainly it is. I remember go back 10 years ago, I was, getting the data manually, building the spreadsheet. I'd be stuffing the envelopes myself. I'd be emailing people. And I think what we can see now is that there are softwares like Dripify, like Instantly, that enable you to upload the data, and it will essentially do the LinkedIn outreach for you on autopilot. It will do the emailing on autopilot. And the great thing about the email softwares is that it will tell you, what's been delivered, how many, whether it's been opened, what response rates you've got, and these softwares are relatively expensive. You're looking at between $10 and $50. It's not huge sums to invest in saving a ton of time. You can also hire people from, places like Fiverr and Upwork, freelancers, to do the mailing for you. I'd certainly recommend actually doing the letters where you stuff the envelopes, maybe handwrite the envelopes if possible, whilst that's a very manual task. If you use mailing houses, I've found that most of them tends to look like junk mail, and whenever we've used a mailing house, the response rates are so much lower than if we did the sort of traditional handwritten envelope. So, what response rates can you expect? I mean, it really does depend on the quality of the data to start with, assuming that you've got the right data, you're targeting the right audience, then you can expect response rates at the time of recording this video. Personalized letters around about 24%, so almost one in four letters you send out, you'll get a response. Generic letters, the response rate is about 3.4%. Email is 0.9%, and LinkedIn is 1.2% using the strategies that I've outlined. So just talking a bit about letters. So personalized letters do take time, and whilst you can use AI, for example, to help with the sort of research, I've found that the old-fashioned way is probably the best. So what I tend to recommend is, let's say over the next quarter, you want to do some outreach, and let's say you want to target 1,000 companies. You've got your list. You want to, over the next 3 or 4 months, you want to do 1,000 outreach, whether that be through email, LinkedIn, letters, or a combination of all of those things. What we find works really well is actually if you mail all of those 1,000, then follow up with an email if you've got an email address, maybe a week later, to say, hey, I wrote to you last week. I didn't get a response, and I'm just reaching out to you via email to see if we can jump on a call. And you send a very similar message the week after on LinkedIn if they're on there. Obviously, not every business owner is on LinkedIn. But what I say is, out of that 1,000, choose your target, your top 100, if you like, of companies that you feel would be really good acquisition opportunities. And then if you break that down over a 10-week period, so you choose 10 every single week, so over 10 weeks, you've got the 100. Do personalized letters for those 10. So Google the company, look for recent news articles, and you can use this to personalize your letter. So for example, if you saw that they just won an award or they took their top performers on all expenses paid trip, you can cite this in your opening paragraph. Probably the best one I did is that I wrote to an owner of a fairly large company that I was very interested in acquiring. And I knew that she was an avid football fan. She was a supporter of Leeds United. I'd found this out through watching a video of her where she'd mentioned it, and because she'd sort of quoted a sort of something about teamwork and sort of made an analogy with football. So I used a quote from the Leeds United manager relating to the importance of people and teams, which was something that this company was particularly well known for. And I'd highlighted in the letter that I was particularly interested in acquiring them because of their very strong people culture. And I obviously, that probably took me, 20, 30 minutes to find that out, write the letter, and do the outreach. But literally within 2 days of posting that letter, I got a call back. So it's certainly a very powerful thing to do. There are other sources too, such as writing articles and posting on Facebook or LinkedIn groups of your things that basically are of interest to your audience. So think really value add. Not, you don't want to be posting things like, do you want to sell your company to me? I'm interested in buying companies in this space. You're really wanting to create value for your audience. So it's more generic content like top tips for preparing XYZ company for sale, or how to maximize the value of your cleaning company for sale. And you can write articles or create content videos, whatever, around that. This is certainly longer burn, but done consistently, you will over a period of time start to build a relationship with your audience. You'll get seen. And I suppose just going back to letters, most tech savvy people think that letters are silly and time consuming, but actually they are the most effective sourcing method that we've found for cold outreach. Networking is something else that you can do. So not just attending physical events, but networking with professionals and people, telling them what you do, what you're looking for. You can offer maybe referral fees for successful introductions. But I've always found with networking that you've probably got to help the person first before they'll repay the favor. So let's look at sort of letter and the outreach. So what do we normally say in or letter? So I'll read you what we would normally say in a letter. So forgive me for writing to you at your registered service address, but as the contents of this letter are potentially sensitive, I thought it'd be better to approach you this way in the first instance. We have an interest in the XYZ industry and are actively acquiring companies in your space. We've identified, you say the name of their company, as a business that will be of interest to us. We'd welcome a confidential discussion in the first instance. It cannot hurt to have a chat around the subject on a nothing ventured, nothing gained basis. and see what opportunities might present themselves. Please drop me an email or a WhatsApp on the below to arrange a suitable time to have a brief confidential discussion. Your emails can be the same. LinkedIn, you might need to do a shorter version of this if you're not connected with them, because LinkedIn limits, I think, to 300 characters. So you can condense that into a much shorter DM. And then if they reply, you can, go into more detail. You want your letter on reasonably good quality paper, plain white paper, not corporate letterhead, and you just want your personal contact details on there, your email address, your personal website, the one that positions you an investor. So you're not using a Gmail or a Hotmail or an Outlook type email. You have your own domain, which is probably your your name in the domain, so it looks more professional. And if you just to sort of, I suppose, look at an analogy, if you want to lose weight and get fit, we all know that you have to reduce your calorie intake. You need to eat healthier. You need to go to the gym. You need to work out. And I guess most diets fail because the habits are not created in the first place to ensure consistency. And also, there's usually no accountability. And if you make it a habit to stock the refrigerator with healthy food each week, and that you have somebody each week that can ask you how many pounds you lost and challenge you when you don't, you're more likely to succeed. And for me, sourcing is no different. You have to make it a habit. It takes place every single week. You can do it yourself. You can hire people. You can use software tools. You just need to make sure that however you're going to do sourcing, it happens week in, week out without fail, and it becomes a habit. And you have to have somebody maybe to hold you accountable to make sure it's done. So look, if you found this video useful, give it a thumbs up. It really helps the channel. And if you want to be notified when the next video is out, hit subscribe. If you're interested in mergers and acquisitions and the content that we've sort of shared today, you can join our free Dealmaker community of hundreds of deal makers around the world. The link's in the description below. For now, happy deal making.